The 200-day moving average is one of the most popular indicators that traders and technicians use to analyze price trends. This indicator represents the average closing price of a security or an index over the past 200 days. There are numerous ways to use the 200-day moving average depending on what type of investor you are. For example, value investors may be inclined to buy dips and search for bargains when prices are significantly below their 200 DMA. Meanwhile, growth investors may wait for the prices to be above the 200 DMA because momentum and breakout strategies can fail when below this key indicator. So let's take a look. This chart shows the percentage of stocks in the S&P 500 that are above the 200 DMA. Looking back at the market on Christmas Eve, only about 10.8% of stocks in the S&P 500 index were above the 200 DMA. This was the lowest percentage reading since mid-2011. Using history as a guide, anytime this percentage has dipped to about the 20% level, it has been a relatively bullish sign for stocks and for investors with longer time frames. Even the most recent low produced nearly a 17% rally in less than 2 months. Many value investors were putting money to work around the end of December 2018, while many growth managers had larger cash positions and were waiting for confirmation of a new uptrend. On Tuesday, February 12th, the S&P 500 closed above its 200 DMA for the first time in 2019. So, a natural question would be, how often does the market trade above the 200-day moving average? Let's go to the next chart. This chart here shows how often the market trades above the 200 DMA each year, going back 30 years. Here are some important considerations you should keep in mind when taking a look at this chart. 1. Every time the S&P 500 was above the 200 DMA for less than 40% of the year, the U.S. entered into a recession, and that would be in 1990, 1991, 2001, 2002, 2008, into 2009. Number 2. 20% of the years have concluded with 100% of the days above the 200 DMA. Number 3. In 2001 and 2008, the S&P 500 was not above the 200 DMA for a single day. And lastly, number 4. Based on the past 30 years, the S&P 500 closes above the 200 DMA 75% of the time on average. So, when looking at the health of the market or a stock, look to see if it's above its 200 DMA. Why, you may ask? Well, this level is often a signal indicating whether the large institutions are selling or supporting the market or a stock. If you are a momentum type investor or trader, you want the index or stock to be above the 200 DMA. But if you are like me and like deep value, look for those stocks under the 200 DMA and then check the fundamentals. So for today, that's ChewDog Charts. Thank you.